Hello, everyone. Welcome back to the channel. Welcome to the weekly review for the NASDAQ 100. Um, Before we begin, as usual, let's just pray. God, we just give you thanks and praise for another successful week, another week of learning. We pray that as we go over the review, may be beneficial to someone, and may we all continue to learn and to be successful on the markets. We thank you and we pray. Amen. All right, guys. So this week was a very interesting week, and I'm so excited to talk about this week because it kind of reinforces a number of principles, a number of concepts on the Auber strategy, which I still think need clarification um, among some of the followers and some of the users. Um, um, that subscribes to this channel. Thank you guys again for your subscriptions, and thank you guys again for the various comments and everything like that. Now, um, as you know, the principle of the Auber strategy is we move from higher lows and we go to higher highs. Okay. And the concept behind that and the principle of this is that the NASDAQ 100 has been a 100% bullish instrument from the inception. So let me just do a quick summary of this. So if you go to your monthly time frame, okay, and you look at the charts, and let's just look at where we can actually see on my window here. Okay, if you enter right here at this purple line, okay, and if you entered here in November 08 at the largest higher low, okay, you could have stayed in this trade until today without exiting if you got this entry. Now, of course, none of us on here watching this video probably even were trading in 2008, okay? And if you were and you didn't take the entries because you didn't know, okay? However, that is one of the reasons why you back test, you do analysis, so you are able to spot trends on the markets, which enables you to actually make the right decisions moving forward. Okay, so if you got in here at this purple line, you've noticed that price has never come back to touch this purple line. And this purple line here represents my monthly support line. This line has never been broken in history. Okay. So with that being said, since you understand that concept that the NASDAQ 100 is always making higher lows to higher highs, then that simply means on any time frame, anytime you are planning to take a trade on the NASDAQ 100 and hold for eternity, as long as the NASDAQ is around, you need to make sure that you're taking your largest higher low. Okay? Now, most people are not going to sit down and wait for an entire month to take a trade. However, what you need to understand is that each time the market corrects, it always stops at a higher low. Every time. This was the last major correction that happened in 2021 and ended in 2022. Okay? Even with all these months of selling, of bearish activity, it only created a higher low. And I don't know how much to explain this to people again, that anytime you see the NASDAQ selling, it doesn't matter how many months, it could be a year, it could be a year and a half, it always goes to make a higher low. This was the biggest sell-off in history, in the history of the NASDAQ 100, the biggest sell-off. It started from November 2021, and it ended in October 2022. One full year of bearish activity. Okay, that was the biggest sell-off in the history of the NASDAQ 100. Another one was in 07. It started from November in 07 And this actually ended in November of '08. Okay, that's 1 year. So it's 1 month short of this one that happened right here. Okay, so an entire year of bearish activity. Even with those months and months of bearish activity, the NASDAQ 100 still managed to only make a higher low. Okay. All right. So I just wanted to get that out. So going back to last week's activity. So we're back on the 1 hour chart. Okay. Now on the 1 hour chart, of course, these are my weekly boundaries. The blue lines, this is Sunday, last week Sunday. And of course, here is going to be tomorrow Sunday, which ended yesterday at 5 p.m. All right. Now remember, the first move of the week came when the market made this higher low. It came from this higher high where it ended on Friday, and it came to this higher low. Okay, look at what the market did. It went up, it completed the higher high, completed the cycle, higher low to higher high, which means it broke the all-time high where it ended on Friday. Last week, Friday, if you remember correctly, it ended at an all-time high. Market came down, it made a higher low, then it went to a higher high. This was at the end of Monday. Okay. Trend has been completed. Now, remember, I've always said you cannot continue buying from a high on the market. You cannot buy from a high. You have to wait for the retracement. Okay. Now, the correct way, or the way that we trade the trend here at AuberStrategy, is that we always take our higher lows. Those are your safest trades. Even in a retracement, you still take your higher lows. The difference in a retracement is that when you take your higher lows, the market will stop at a lower high. That is because the trend it's retracing. The price is retracing. It's doing a correction, as some people call it, to make the next higher low on a larger time frame. Now, when the market is retracing, it will do that a number of times. However, you still take the higher low so that when the trend has finally reversed, when support has been finally reached, then you will have already been in the practice of taking your higher lows. And then all you have to do is just sit back and allow the market to do its thing. Let me show you what I mean. So this was here. Market came and it made a higher high right here. All right. This was the end of Monday. Okay. Instead, you take your profit here. Instead of selling, okay, because the sells are always risky. The sells are always risky. The thing with sells is that people get so accustomed to the sells that they ignore the signs that the market is giving you that it's not ready to buy. People always forget, and you always get trapped in bear traps, and the market has turned around and you're still stuck in that sell and wondering what the hell happened. All right, let me demonstrate to you. So this is where you take your profit. Okay, so you're out of here. Okay, the next thing that you do, you're waiting. So the market came, notice it made a higher low here on Tuesday. Okay, you get in on this higher low because it's the largest higher low on the time frame so far. It's the largest higher low. All right, so you get in for this higher low. Price comes up. Instead of making a higher high, you have an interruption in the price, in the structure. So you get a lower high. So you take your profits right here. Because remember, in the retracement, instead of making higher highs, it's now going to start making lower highs. It doesn't mean that the master trend is changing. It's just the trend on that particular time frame that is retracing that you see that interruption in the structure. So instead of making a higher high, you get out on the lower high. And you have a lot of time to actually get out of this trade. Okay? You have a lot of time. Let me demonstrate to you. So let's use our backtest tool. So you go here. All right? So this was this was Wednesday. Okay. Notice you came in. Okay, came in here. Okay. Price is here, you're already in profit. Okay, let's measure this. You came in at that yellow line right there, you're already in profit. So all the way to the top, you're at 700 pips, 700 points, price settled there. Excuse me. You're 400 points in profit. So you are in profit. But notice there's no sign of a lower high. So, of course, remember the trend is higher lows to higher highs. So let's watch what the price does. So you do this. Price does that, comes down. You're still in profit because it doesn't touch your entry. Price is doing a lot of consolidation. Okay. Price is pushing up slowly. Now you're back in, bigger profits. Price has pushed up. Okay. There you go. You have your first sign of a lower high right here. Right? First sign of a lower high right here. Okay. What that tells you now is that, guess what? This market, instead of making higher highs, it's now intent on making lower highs. So even if you take your profit right here at this line where the price settled, right at the previous all-time high of last week, look at what happens. If you measure your move from this yellow line all the way to the previous all-time high, you're at 800 pips. Okay? 800 pips, you take your profit. Now you're waiting. You're now going to be waiting for your largest higher low. Even if you got out here, at the first sign of the lower high, you take your profits and now you're waiting. Remember, each time when you get that point, that interruption point, that consolidation point on a lower high, if you're waiting on a higher high and you only get a lower high, you take your profits and you wait. So look at what happened. So trading day continues. This is what happened. Price even pushed up. It came right back to the wick where you came out. But look at what happens. Price did that. You're right in the zone. So you see how many chances you got to exit out of this trade, right? It pushed up a little bit more. So what? Don't chase the market. You're waiting. It already told you that it's not going up for a higher high. All right. So look at what happens. So you go here, you click on the price. Now we're in London session. Now price does that. Now it's starting to show you that, hey, it's going to be bearish. Okay. However, you're not selling. You're not selling, you're waiting. You already took your profits right here at this line. You already got your 800 pips. Yes, it's not the big trade that you wanted, but you still were in profit. Why? Because you came in at a higher low. You got this lower high point right here. It tells you that it's not going up to create another higher high right now, but you're waiting. That tells you that the market is in retracement. So look at what happens. Now you're waiting. You're still out of the market. So while everybody is jumping and saying, oh my God, yes, I told you, higher highs to higher highs are not guaranteed. You don't worry about that. You're waiting. Even price came back here, it passed here. Guess what? You're not in a trade. You're waiting on your larger time frame to make a higher low. So here we are right now. Price came and broke here. Now look at this. We go on the 2-hour time frame. Now we're on the 2-hour time frame. Look at this. You have a larger higher low. You go on your 3-hour time frame. Look at this. What is your 3-hour showing? Higher low. You go now on your 4-hour. What is your 4-hour showing? Higher low. You go on your 5-hour. What is your 5-hour showing? Higher low. You go on your 6-hour. Higher low. Okay, you see what I'm saying? So you're waiting on your larger time frames to give you that higher low. Okay, so now you're waiting. Remember, you already took your profit and you're waiting. Doesn't matter that you're not in the sell. That's not what you're trading for. You're trading for your largest higher low. So now we're at the 6-hour. You go to the 7-hour, same situation. You go to the 8-hour, same situation. 9-hour, same situation. 10-hour, 11-hour. You're at that higher low. You go to your 12-hour. Guess what? The 12-hour doesn't have anything on. Guess what? Your 11-hour is your largest higher low. Your largest higher low right there. So remember, on Tuesday, it was the 1 hour that was at the higher low. You took that trade from the higher low because that was the largest higher low of the day. However, instead of it going up to make a higher high, it made a lower high. So you took your profits at your lower high. Remember, at your previous all-time high. Let me go back on the 1 hour so I can show that to you. Okay, so you took your profits right here. And now you're waiting on your largest higher low. The fact that the price came down and broke here, it's telling you at that point in time that guess what? A bigger time frame is now making the higher low. Why? Because price came down and it broke this previous higher low. Now it's made a new low. Now it's broken structure, but only on the 1 hour time frame. Okay, so that's important. So on this day, you now take your higher low, okay? Because remember, you're now on the 11-hour. You're now going to take your largest higher low, okay, and move forward, okay? Now, here we go. So look at what price does, all right? Notice it came right here. So remember, you're taking your largest higher low, which was on your 11-hour time frame. Now look at what happens, and this is the important thing about watching your time frames. Okay, price started to go up, so you're in this buy. Okay, price shoots up, you're in profit, you're going up. Price continues going up right now. Okay, you press again. See, price continues to go up. Now at this point in time, you're watching your time frames carefully. You're looking now at your time frames like your half hour, your 45-minute. You're looking for signs of continued consolidation and signs that the market is still either making lower highs or it's now breaking back in trend to make your new highs. Okay, so what you do from this point in time, you're now on your 45-minute time frame and you're looking. See, nothing is here as yet. Okay, nothing is here as yet. All right, so what you do is you continue. You have to monitor every single time frame. So now you're looking at price. Okay, price is doing some consolidation right there. It doesn't show any signs of lower highs yet, so you know the trade is still good because you have not gotten even a lower high. So you know the price is still going to continue going up until those highs have been signaled. All right, so here we are. Price is still consolidating. We go again. Price now starts to push again. Okay, now we're into the new day, Wednesday. Look at what price does. Okay, look at this. You now have a sign that the market is making lower highs. But I'm on my 45-minute time frame. Well, guess what? If it's showing you that it's making lower highs on those time frames, even before you get to your 1 hour, that is a sign that the market still is not making higher lows, higher highs, even on your smaller time frames. Okay, so what you want to do is you check a time frame like your 50-minute. Okay, your 50-minute is making a lower high, a lower high point instead of a new high. So again, it's showing you that the market is still doing some amount of consolidation. Guess what? You came in here at this point, the same thing applies. You came in at your largest higher low because remember, it was on your 11-hour time frame. So you came in, price came here, and you see a lower high. Guess what? That's 1,300 pips that you would have gotten. 1,300 pips. So you get out, you see that lower high point, that's enough to tell you that the market is not making higher lows, higher highs. However, because you came in on your higher low, which was your largest higher low on your 11-hour, let's go back again and let's look at it. On your 11-hour, here we go. This was your largest higher low. Okay, price is now here. You don't see a lower high on your 11-hour. However, once you go and you look at a time frame like your 50-minute, you see that it's making lower highs right here. That tells you the market is still consolidating. This market is still now in that retracement mode. So I'm going to take my profits here because I'm still not sure. Remember, the lower high is the signal to tell you that, listen, the market is not ready to go back in trend as yet. It's still retracing. So you take your profits here. So this is another 1,300 pips. So now you're out of the market, okay? And now you're waiting. So you're out of the market completely. Look at what happens. So we can go back to our 1 hour. Nothing showed up here on the 1 hour, but you have a signal on your 50-minute, which tells you this market is not interested to go up as yet. So you take your profit right here and you're out. Okay, so look at what the price does. It pushes up for a little bit more, doing some consolidation, pushes up a little bit more. Okay, and then look at what it starts to do. It starts to show you, hey, you know what? I'm really intent on going down. So even if you stayed in and you wait until you got two bearish candles right here, guess what? You're still in profit. That's the point that I'm trying to say to you guys. That's the beauty of taking your higher lows. Even when the market decides to come back, when it's not ready to complete that higher high, you will have more than enough chances to get out higher than your entry, which was your largest higher low. So look at what the price did. It went, excuse me. Now you're going to start to see it come down. Because of course, the price is continuing. Now look at this. You have 4 hours, and 4 hours, you're still in profit. Even with this retracement, you're still in profit after 4 hours, and you're like, okay, let me hold on to see what the market is doing. After 4 hours, the market clearly tells you that it's not ready to go back up as yet. But remember, your entry is right here. Okay, right at the support and resistance point, that was where your entry was. So this is what the price did. So remember, you exited at this black line. Look how long it takes for you to even get back in the red. So you had so many entries, so many points of exit. Okay. So first time you touched this black line right here was here. So you have 1, 2, 3, 4, 5, 6, 7 hours, and you're still in profit because you got this entry right here. Okay. Look at what the price continues to do. All right. So that's 8 hours and you're still in profit. Okay. 9 hours, you're still in profit. 10 hours. Okay. Now you probably barely in profit. So you had almost an entire 12-hour cycle for you to actually safely get out of the trade if you're not sure of what the market is doing. Okay. Then here comes the big assault. Okay. But here's the beautiful thing about trend trading. Okay. Even with here, even if the price gets here, you're not seriously in the hole because you came in at the largest higher low. Now, at this point in time, if you're still holding the trade, now, of course, now is when you get a little bit worried. But you had almost 12 hours of bullish activity and 12 hours to see that this market has not decided to continue going up. So you had more than enough opportunity to get out of the trade. So remember, you enter on your largest higher low. If you see that consolidation point, then that is when you decide that, okay, fine, this market is not going up further. Hang on 1 second, guys. Sorry about that. All right. So now you'd have been out of the trade. Now it came to this point and you see this continued bearish push. So you're out of the market. Okay. And you're waiting. You took your profits here again. Now you're waiting. So with all of this, you see that the price came here. Now, what this tells you is that now a larger time frame than the 11-hour is actually interested in making that higher low push. Okay? So a larger time frame now. Remember, the higher low started with 1 hour. It came up. It made only a lower high. That tells you that the market is not ready to go up as yet. So you take your profits and you wait. Okay, now it shifted here to the 11 hour. Okay, it came up, and on the 50-minute, it showed you, oh, I'm not ready to go up as yet because I'm still making only lower highs. So you take your profits here and you wait. So with all of this selling activity, you're waiting. So you're saying, well, I could have taken this sell. Well, yes, you could have, but guess what? The safest trade is going to be the higher low, and you get out at whatever, excuse me, whatever highs the market is showing you. All right, so now you're out with all of the sell, you have your profits, you're waiting, you're not doing anything. So now let's check the time frames. Remember, last one we were on was the 11 hour. Now we're looking at the 12 hour. Okay, 12 hours now at a higher low. Okay, all right, and the market is still pushing. All right, so here we go, the 13 hour, the 14 hour. All right, so now you go all the way up, because basically what happens is that at the end of Thursday, right, all of this carried right through until Thursday. The higher low actually went all the way up until the 23 hour. Okay, so that now tells you that the market was in fact doing a hard retracement to put on the higher low on your larger time frames. Okay, and I'll point something out to you again in a minute. All right, so let's go back to our time frames again to monitor what was happening. So here we are. Here we are. So the market did this, and of course it came down and it finished up very close to that trend line right there on Thursday. Okay, here we are. All right, still on the H23, this was your largest higher low. If you move to your day, you'll notice that the day, with the end of the day, it still did not put on a higher low. Okay, so that's where the higher low ended on Thursday. All right, going back to your 1 hour, notice what happens. Okay, and I want to point something out to you, and I hope you can see. Two things I want to point out here. This was Monday, this was Tuesday, this was Wednesday, this was Thursday, and this is Friday. Okay, so notice after Monday, okay, on Tuesday, this is where the higher low was. Okay, this was the low of the day. Wednesday, this was the low of the day. Thursday, this was the low of the day. Now, this is what caught most people who are bearish, and it catches them every single week without fail. The market does this Tuesday, Wednesday, Thursday. It made lower highs, lower lows on your smaller time frame. And this is what caught a lot of people. And this is why I always say to you, when you live in the smaller time frames, you will get caught, because the market basically hypnotized you. The market says, oh, yes, we're making lower highs, lower lows. It's falling. One person commented, oh, bro, shut up. It's been going down for 3 days already and everything like that. And I'm like, just wait. Just wait. You won't be singing the same song at the end of the week. So Tuesday, Wednesday, Thursday, that's what it did. It opened the gate. More sellers jumped into the market. Okay. See all this volume, more sellers jumped into the market. But look at what 99% of you missed last week. And this is what the market does to sellers. It lets you pay with your life. Okay? Look at what the market did on between Thursday and Friday. So again, this was Tuesday, Wednesday, Thursday. Lower highs, lower lows, right? By the time you got to Thursday, this was the low of the week. Most people didn't realize that. Okay, how do I know this? Well, if you've been following my analysis all week and paying attention and making notes, you'd have realized that I've drawn a trend line for the past. Let me go on the bigger time frame so you can see more. Let's do a time frame at the 4 hour. If you have noticed, for the past months, I've drawn a trend line. And that trend line has stayed with me for, I guess the latter part or most every single week I have these trend lines. So I have my upper level trend line, I have my lower level trend line, and I have my extension level trend line. These trend lines have stayed with me on the charts. If you notice last week, the price actually came down and kept coming right down until it got to that trend line. Most people miss that. Okay, because you either weren't paying attention, you either not tracking, and you either not reviewing. You're just watching the videos, hearing me talk, and say, yeah, I talk a lot and everything, and a lot of things just passes right over your head. Okay, but the serious ones actually pay attention and understand what's going on. So here we have it. Price came right back down to the trend line. Let's go back on the 1 hour and see exactly what happened. So let's zoom out right here. Look at what the price did. Came exactly to the trend line, touched it. This was on Thursday. Okay, but here's the point where a lot of people missed. Okay, this was Wednesday. Because you were, sorry, this was Thursday. Because they were so accustomed to the market making these 3 days of lower highs, lower lows, they assumed it was going to continue. And remember, I've always said this. Any sell that the market makes is only a temporary retracement to make the higher low on your larger time frames. Okay? Look at the 23-hour. The larger time frame at this point, it's at a higher low. Look at your 1 hour. The 1 hour broke structure. From the time it reached here, it broke structure. But it doesn't mean it's permanent. It's only a temporary break in structure in order to form your larger, higher low. Okay, so here we are. Okay, trade is here. Okay, entry point here. You're right in line with your trend line. And if you look to your left, notice every single time that the price comes down and interacts with the trend line, okay, it shoots up. So before here, it came down, broke below the trend line, but it always made higher lows until it broke above the trend line, consolidated along the trend line for a short while before closing above and continuing up. However, this was the retest of the trend line. Okay, so it came here, touched the trend line. So of course, your entry is going to be there. Okay. All right, so here we go. Look at what the price did now. This was Thursday, so don't miss this. Price did this. It shot right up. Okay, but still no lower highs. All right. Price did this. Look at what it did. Pay attention. Shot back and it broke above. This green line here was actually Wednesday's low. Okay, it shot up, it broke Wednesday's low, and it actually started consolidating along Wednesday's low. Now pay attention. This is where a lot of people missed what the market did last week, and you're going to pay dearly for it coming next week. Okay, if you're in a sell. So the price did this. We're still on the 1 hour. It came down. A lot of people are saying, oh, yes, it's going to dip. But look at this. Big rejection right here. Now, remember, I mentioned to you, you look at what the market is doing on your smaller time frames for clues. Now, the market is doing what it did earlier in the week in reverse. It's just playing out on a different time frame. So when you look at a time frame, let's say, for example, your half hour, okay, it made a lower high. Tells you, okay, fine, it wants to go down. So naturally, it made a lower high. Look at what it did. It dipped, came all the way back down here. But guess what? It wicked out. Now, why did this wick out right here? In order to see why it wicked out, you have to look at your time frames. So you go to your 15-minute and you would have noticed right here that this lower high, instead of making a lower low, it only came and it made a higher low. This tells you that there's an interruption in the structure because you have lower highs, lower lows. That's basically telling you that the market is in trend, okay? But then you have a lower high, and instead of having another lower low, you now have a higher low. That's an interruption in structure. That tells you that right here. So this is what happened. This is the wick that you're now seeing on your daily time frame right here, on your half hour, and now on your daily and all the time frames above. Okay, so going back to your daily, this was your wick right here. You saw this bullish candle. Now look at what the price did. This was still in Thursday. Okay, and you guys still had, if you were in the cells from here, from Tuesday, you had more than enough time to get out. Okay? So look at it. So it came, it did that. So we keep going and look at what it did overnight. It just consolidated like crazy overnight. Okay? Before finally going up and making a lower high right here. Now remember the concept, guys. Remember the concept of trading the trend is if you get in on your largest higher low, once the market starts to make a lower high, you take your profit and you wait. This low right here was a higher low on the 23-hour time frame. Okay? Take your entry right here. Price came up, it did some serious consolidation before terminating and making a lower high right here. So this tells you, okay, fine, I'm not ready to go up it. I'm still having that bearish pressure. I still want to go down. So you take your profits right here and you wait. So remember, these are 3 trades now that we took using the higher low strategy without taking a sell and getting a safe entry, taking our profits. And a lot of people are laughing at this point. Oh, where's the higher low, higher high guy? Where's this? Where's that? You know, yeah, everybody was laughing and saying at this point, but not realizing that all of this week, you still had the opportunity to take 3 safe trades. Look at how much this one is worth. So you took this one from here and you waited and waited and you got your first sign of a higher low. Now you got 2,000 points. So remember, the first trade that we took, 800 points. And I know somebody had commented, you know, saying, oh my God, oh, he's laughing. You normally gets 2,500 points, but he only takes a short trade. Okay, duh. It's still a profitable trade. Whether you get 500 points, whether you get 1,000 points, whether you get 200 points, it's still a profitable trade. And the important thing is that you're consistent. You do the same thing over and over and over again without fail. You will be rewarded for your consistency. So the first day you got 800. The second day, I believe it was 1,500. Now you're up to your third trade. And now you have 2,000 points. Okay? So you take your trade right here. You take your exit right here because it made that lower high. Now, you're expecting the market to come down now to make a lower low because guess what? You have that breaking structure point right here. Okay, it made a lower high. So naturally, the market is planning to come down to make a lower low. However, being consistent because you're only taking your buys, you're waiting. So you're waiting now to see this lower low because the market is telling you, okay, fine, I broke structure. I got the first leg of the confirmation. The second leg to confirm that the trend is going to be valid is to come down and make a lower low. So look at what happens. So you're out. Look at what happens now. This is on your 1 hour. Price came. It did that. Boom. Look at this. It made a higher low right there. Remember, that tells you that the market now is consolidating because it didn't come down and make a lower low as it did in the past on the smaller time frames. It did not do that. It came and it made a higher low, which tells you that that's an interruption in the structure right there. So if you're selling, you should not have missed this point. This was your last point for exit. At that point in time, you should not have missed that point. And look at what happened. It happened so fast that many people did not realize it. And I actually called it. I actually said it in my thing, in my commentary. And I knew, and I know most people ignored it. Like, oh no, it's going to continue going. It's been falling all week. It's going to go all the way down to 2,400 and 2,300 and blah, blah, yada, 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 yada. But missed the point that it made a higher low right here. There's a big interruption in structure. Now look at what the price did. So you're there. Price came up. Boom. You now have a new high. Price has now broken back in structure, albeit it's still a consolidation high. Price broke in structure. Now, here's the important thing about this, and that's why I said when you're trading, you have to be watching all your time frames. And most people don't understand that. Most people live on the small time frames. They never pay attention to the large time frames. And when they do, they stick to one time frame without looking at the entire spectrum. So this high right here, I already know that this is a lower high on my larger time frames. And again, here's my concept. Here's the concept. You get in on your higher low. Again, your H23 was the higher low point right here. And every time the market makes a lower high, it tells you that, okay, fine, it's not ready to go up yet. So here's what I'm going to do. I'm going to take my profits and I'm going to wait for the next higher low. I already know that this is a lower high on my larger time frame. So I go up to my 2 hour. Sure enough, here we go. It was a lower high. So I would have been out. So now that I'm out, I am now waiting for this market to come down and now make me, guess what? A lower low. Or sorry, a new low. I'm sorry. I'm now waiting for it to come down and break this point to make a new low. Okay? So look at what happens. We go back to the 1 hour. So price did that. It made that high. Look at what the price did. Boom. Here you go. Here's your new low. This new low is that higher low that you will be seeing on the 2 hour. So you look at your 2 hour. Here we go. That's the higher low right here. Again, another interruption in structure. Price is not interested in coming down to break this to make a new low. That tells you all that you need to know right there. And we already know that the H23 is at a higher low point. So, which means higher lows to higher highs are still in play for the trend. And also you have that confirmation. Price came down, touched that trend line from the previous day and has been consolidating above the trend line since, it made that lower high on Thursday. Okay. So now you have that new low on the 1 hour right here. But guess what? Here's the thing that most people missed. And I keep saying this to you guys all the time. This new low that was formed was higher than the previous new low that was formed the day before. So that clearly tells you that the market is making higher lows to higher highs. So guess what? Even if you came in on this entry right here, you took this higher low and the price came up, right? And you didn't take your profits right here, and it came back down and it went below this, not to worry. It's a low that's higher than the previous high. But guess what? Because you do the same things every single time without fail, the market comes up, it makes a lower high. It tells you, I'm not ready to go up yet. Take your profits and wait. Okay? So guess what? This was the trade that you took right here. So you took the trade right here, got that lower high right here. Remember, this was the exit where we got the 2,000 points. So here we go. It was from here all the way to here, 2,000 points. Okay. So you took it out, you wait. It came down, it made this higher low point right here. I actually took this trade here on Friday here at this point. Trade comes back up. It makes that lower high. Guess what? This is the fourth trade of the week now. You're now at about 1,500 points. Right there, 1,481. Let's call it 1,400 points. You're now at 1,400 points. So that's 4 trades. Now remember, you see, again, you started off with a low number, 800 points. Then it went up to 1,500. Then it went up to 2,000. Now you're at 1,300 points. So remember, it makes that lower high. You take your profits and you wait. So the price sold again and it came down. It broke here, made this new low. Guess what? You're entering this trade from right here. Okay? Concept remains the same. And this is now going to be your last trade of the week because now you are in trend. Now you are in trend. Now you can sit back and allow the market to do what the market does, which is go back up to make another all-time high. So you did all of this without taking one single sell. Okay, now look at what happens. This was on Friday. So it did all of that. And if you remember some of my videos, I told you, anytime the market is doing a retracement and it's getting ready to go back in trend, there'll be a lot of consolidation before the market actually decides to take off. It gives you a lot of opportunity. Sellers, you got a lot of opportunity to take your profits. A lot. And I know most of you didn't take it. You sat there all of Friday, quiet, not being able to say anything at all because now the market has finally shut you up. Now the market is finally saying to you, listen, you guys were wrong. I am not selling. That was just a retracement in order to create my larger time frame, higher low on my H23. Now we're going to go back in trend. So look at what happened. So there's your last entry of the week for the buy. And you're in it. And look at what the price does. It went up, it shot up. Okay. Did some consolidation. This is the last portion of the day. This is where now a lot of people started to feel like they wanted to go sit on the toilet, have diarrhea, all kind of stuff if you're a seller, because right at this point, you realize this price is not going on. So all of you who jumped into sells roundabout here on Friday and everything like that, taking this lower high, thinking it's going down, I'm sorry for all of you. You got your chance, okay? You got your chance to get out and you didn't take it. Look at what the market did. So here we go. Market did its fair amount of consolidation and it ended right here on Friday with new high on the 1 hour time frame, which tells you it's back in structure towards making those higher lows to higher highs. And look at this. Don't take my word for it. This low is higher than the previous new low. This high is higher than the previous new high, although it's barely above it. But guess what? The trend does not lie. It's a higher low to a higher high. Okay? You want more proof of that? Remember, higher low, higher than this low, to a new high, higher high. It broke this high. Okay? This is my 1 hour time frame. Well, don't take my word for it. Let's look how it played out on the 2 hour. Remember, on the 2 hour, there's a higher low, which is higher than this previous higher low. And then guess what? Look at this letter right here. Let me blow it up so you can see it because I don't want you to miss it. This is where the market ended on Friday. This was a lower high. This letter right here is a higher high. Okay, you want to hear something more scary if you are a bear? This higher high is still lower than this higher high. However, higher highs always continue until they break the previous higher highs to be a true higher high. So this price is going to continue moving up until your all-time high is broken again. Now, I know this review was a little bit longer than normal, and I purposely did it because I wanted to explain exactly what was happening, what most people missed all of last week by getting hypnotized by the market. Just by looking at the 2 hour, all that selling that took place was only enough to register a higher low on your 2 hour time frame. This higher low is the same higher low that you see on your 23 hour time frame. So that tells you that all the selling that took place last week was only to create a higher low on your larger time frame. In this case, the 23 hour. It took a number of days before this registered, and that's where a lot of people got caught up in it. Okay, so that was the recap of what happened this week. You saw the market did exactly what it does every single time. It just manifested in different ways. You guys have to learn to do your journaling. Learn to read the signs, learn to read all the time frames, and stop listening to people out there feeding your emotions, telling you about, oh, buy here, sell here. Yes, the market is going to crash and all of that stuff. Everybody got caught up into that. There's a reason why only 5%, 1 to 5% of people succeed in trading. And the people who succeed are the people who are willing to do what it takes in order to be successful and not just be signal chasers. So thank you guys again for watching. The next video that I'm going to be putting out later on tonight is going to be my analysis for the upcoming week, still based on the AuberStrategy, higher lows to higher highs. Thank you guys for watching. Sorry about the length, but I really hope that this content served to help you to have a better understanding of what took place last week so you can make improvements. God, thank you again for your blessing. Thank you again for this opportunity that we have to trade. We ask that you'll just be with anyone who watches this video, help it to help that it may help them to improve in their process, and may we all succeed together. We thank you and we love you. Amen. All right, guys, take care and see you next time.